getting comfortable with financial statements. You know, I have friends who join new organization as a board members or as a executive director. Oh, let me take a backtrack a little bit to introduce myself. I'm the founding partner of the firm and started 30 years ago. And our firm exclusively deal with nonprofit, no tax returns, nothing like that. And we have 100 people now in New York City and 100 staff in India. So to really kind of address the need to gain more flexibility. So you know, and when we did that, it really helped us a lot in terms of adjusting to working remotely and having to coordinate and all of that. So now back to the subject matter. I was saying that friends of mine have joined organization as executive director or as board members. And then afterwards, they ask me, say, oh, can you know, it's not what I expected. The organization is not as what I thought it was. So, and then they showed me the financial statements. And I said, well, you know, it's this, that, and the other. So what we're trying to do here is to really kind of more address to executive director, program director, and board members on how you look at a set of financial statement and how you assess the health of the organization and how, what I said, kick the tires. So here you have a balance sheet, total asset example, a very simple example, total asset of 500,000, liability of 300,000, and net asset of 200,000. So in accounting, it's the balancing situation where debits equal credit. So the total asset is 500,000 and liability is 500,000. So the formula is net asset is equal to total asset minus the total liability. Okay, so now, you know, when you have a net asset of 200,000, so basically what does that mean? It means that if you convert all your assets above the 500,000 into cash and you pay out all the liabilities, that's what you would have in your bank account on that day. However, what we need to do is really, it's not that kind of obvious. And I think that's why I think we one board members and executives look at financial statement, they should be able to really kick the tires, know what makes up those numbers. So it goes to the next one. So here, so what we're saying is that in column B, you say, okay, now 500 net asset of total asset, total liability of 500,000, net asset of 200,000. But let's assume that on the account receivable, that you have 200,000 only this collectible. What does that mean? That means that your net asset is no longer what you thought it would be, because and then it goes down. Because that's why it's important to have, when you see account receivable, and when I sit on the board, I want to see the supporting schedule. What makes it about 250,000? I don't want to be at the end of the year surprised. Oh, you know, all of a sudden I have the auditor comes in and they make a journal entry reducing my receivable. So as board members, as executive director, program managers, you are the ones who know. You see the name of the organization that is reported as owing you money. It could be that you know that those organizations are not going to pay because the receivable has been sitting there for years and it's never going to be collected. So you don't want to have to wait for the auditor at the end of the year to tell you. So during the course of the year, you have to kind of want to know that detail. So this is an example of one number changing and what is the effect. So if your receivable is not collectible, what does that mean? That means your net asset is going to be lowered by the corresponding number. Let's go to the next example. So furniture and equipment. So, what we say, what is net asset is when you convert everything into cash. But we all know that with furniture and fixture, when you want to get rid of it, you're not going to realize that kind of cash. And in most situations, you have to pay money for people to get rid of it. So here we use an example. Okay, now if furniture and equipment, we only get 25,000 for it. If we sell everything, 25,000 cash. So your net asset is no longer 200,000, it's 25,000. So those are the things that's why I think it's important for the set of financial statements to really have a supporting schedule, so that you can kick the tire and you avoid the surprises. So the next example is, okay, so by the same token, because sometimes, I had some client who was able to negotiate, because they were in difficult situation, negotiate a reduction in the payable. So by the same token, if your receivable is forgiven, so instead of 250, you have 150, that means that your net asset is going to go up to 300,000. So as you see here, depending on how the realization or the amount of fund that you have to part yourself with to settle your liabilities, it affects your net asset. Okay. So the other part here is the relationship between the statement of financial position and statement activities. It's very important to really, because sometimes organization just gives you only the income statement. So when I sit on board of directors, I say, unacceptable, because that means that the accounting system is weak if it's just the income statement. And some organizations say, okay, I'm going to give you the balance sheet on a quarterly basis. So I think I would go with that, but I would not go with that in the long term. And it's got to be to the point that we move towards balance sheet and income statement. Why is it so important? Because without the two together, I cannot see. People can hide things from an informed reader of financial statements. So here, an income statement you will see. So the total income in this example, if you look at column B, is $1 million. Total expense is 100,000. So the change in net asset is a negative 100. So you dip into your reserve coming from a prior year. So net asset at the beginning of the year was 300,000. At the end of the year is 200,000. So if you look at the statement of financial position side, and it's not by coincidence, the 200,000 is your net asset. So we look at what that means. So if somebody is trying to hide things from you, it's either in one of those accounts. So either they want to inflate your receivables to really keep the change of an asset as positive as possible. So by having those together, you can kick the tires. And when you see the financial statements, you want to see the detail of the schedule, because otherwise, a lot of times say, oh, I've sat on board and say, oh, don't worry, I haven't that under control. So that's very alarming to me. So if you have under control, why didn't you show me? So there is important accounts where you need the detail. So again, the receivable, if it's not collectible, that's going to make my deficit go up from 100,000. So all of that you need to really kind of of have that relationship. And then it's just to see year after year. It's almost like our own budget. We start the year with, in this case, we start the year with 300,000, and we have a deficit of 100,000. So at the end of the year, we ended lower. So you want to also look at the trend. Am I going year after year in a position, or worse and worse position, or it has been up and down, and why do you have the up and down? So this example is just a simplified way to really assess the net asset, because the net asset is what's important, because this is your reserve. But you have to look at the quality of your reserve. Is it a liquid reserve, or is it not a liquid reserve? So over the year, is it going to get better, or is it going to get worse? So I think it just kind of, this is a very simplified way of showing you how the connection, and how for you to assess the quality of your net asset. So then that way, when you join a board of directors, or when you take a position as a decision maker in a nonprofit, you want to look at the financial statement, and you want to be able to assess it. Because if the net asset is all in fixed asset, you cannot do anything. So you have to kind of break it down. What makes up your net asset? Is it liquid? Is it going to allow me to really sleep at night and not worry about it? So all of those questions. So this is what we're trying to do here, because I find it's very important to really tie everything together. So most organizations are much more complicated at it, but it's reduced to this kind of relationship between income statement, balance sheet, and the various account in the balance sheet. So again, is not to make you executive director or board member accountants, but it's going to really kind of allow you to kick the tires and ask the questions, so that you are better informed and avoid surprises. So I think that's it for my part of assessing the getting comfortable with the financial statement. Any questions?
I have a question. Do we do it in the chat or like this?
Do it like this.
Okay. Number 9 is number 9 on your sheet is total assets plus liabilities, and it equals 500,000. My question, and what I've never understood with the balance sheet, is why would you add those two? For what purpose does 500,000 serve when it's a liability? I don't understand why you're not subtracting it rather than adding it.
Well, I think it's if you look at the bottom, because it depends how you define it. So what I define is like what is net asset? What does it represent? So the definition is if you convert all your asset for the amount listed on the balance sheet. So let's say, okay, cash is cash. You have as a cash. Account receivable, 250,000. Do I have that in cash? Will I be able to convert in cash? So that's why if you have something is not collectible, you're not going to get 250. So, and then the furniture and equipment, if you can sell it for exactly 150 and you pay your liability of 300,000, this is what you have left in the bank. So did that answer your question?
No.
Okay.
I don't. Why are we not subtracting liabilities from assets?
Yes, we are. So if you look back at the formula, Shivani, go back to the formula. So total asset minus liability. See, total asset, net asset is called total asset of 500,000 minus total liability of 300,000 is equal to 200,000.
Okay.
So the next time I probably put the numbers in there so that 500,000 minus 300,000 equals 200,000.
Could you tell me for what purpose would I be interested in adding my liabilities to net assets?
No,
Maybe that will help me understand.
Okay, because the net asset is that's your like the amount that you would have if you liquidate. So it's as of that date. If you sell all your asset, add that to the cash, and you pay all your liabilities, that's what you would have left. So that's why asset minus liabilities equal to net asset. So you have all your asset. Well, let's look at each of us example. So we have cash, we have receivable, we have asset, cost, and all that. So let's assume that all that adds up to 500,000, and then say, okay, I want to move, I want to get out of here, I want to sell everything. So then I have to pay all my liabilities. So when I'm done with paying all my liabilities, the net asset is what I have left. So that's why what you want to do is really assess the quality of that number. And to assess that, you have to kind of look at the components. And all those components behave differently. They have different characteristics. So the key is, can I realize what is carried on my books as asset? When I get rid of it, I dispose of it, can I get that amount in cash?
And am I not paying, if I pay all my liabilities, then I'm out $300,000?
No, because if you convert everything into cash, you get 500,000 in your bank, right? So you get 500,000 in your bank, you pay off the payables and all that of 300,000, you will have 200,000 left in your bank.
So liability, accounts payable and loan payable, items number 5 and 6, those are payable to me, not.
No, payable to outside. So payable to vendors,
Okay.
a loan payable that you have to pay to somebody outside. So the asset are the positive. The liabilities, you owe it to outsiders.
I don't want to, I don't want to,
it could be a loan to a
slow
bank.
down the rest of the class. So I'll pause for now.
Right, and if you want, give me a call, or we can have a separate session to clarify some of those questions, and I'm sure it helps some of the audience in terms of clarifying the question that they may have in their mind also.
Thank you.
Any other questions?
I have a question, but it might be more for the earlier presenter where we talked about outsourcing some of the in-house services we have.
Yes, so go ahead, ask a question.
Yeah, I have actually a lot of questions, but in the interest of time and being respectful, I'd like to simplify it and just ask, what have been the challenges that you've seen in getting or convincing nonprofit organizations to outsource or utilize more technology? You've definitely listed a bunch of benefits. I'm convinced by them, but I don't think everyone is, and I speak that from experience. And so I have my little list over here of the challenges that I've seen, but I'm definitely interested in knowing the challenges that you've seen, and also how do you convince folks still in that hesitation period? And is there any truth to some of their hesitations that they hold on to? They're not fully convinced of these benefits.
It's just like from my experience, our firm started as an audit firm, and then as we were doing audits, the management letter, which can just repeat it, and then just a lot of organizations are not able to really implement the recommendation because it's not easy to find the right staff to do to do the amount of work. So larger organizations, they're better equipped to do that, but smaller organizations had a harder time to really find the right staff, keep the right staff in the long run. So what I kind of really recommend is that if you're thinking about outsourcing, is to really ask for 3 or 4 recommendations of organizations that use that firm, and then what kind of response you get from that. Because a lot of time some of the organizations that we work with, they say, okay, the executive said, now I can sleep at night because we were addressing the things that we resolve for them. And then what we like to kind of this make us a little bit different is to really make the financial statements speak back to you in formats that you can relate to. And when we cover managing restricted contribution, you'll see how we really tackle that. What we try to do is mirror the reporting format with the accounting theory, so that you can kind of say, oh, now I see, and then you can participate in that. So the combination of you not being able to not having to worry about turnover, having good numbers, timely numbers, so that's what is going to be important.
Thank you for that. I think the size thing is definitely, size of our organization is something that I've definitely noticed. And I always wonder at like, is there like larger organization versus small organizations, like, which one is better equipped for some of this work? So I found it really interesting that, you brought up size also. But just to follow up, I think there's a few other things that I myself have been in a position where I'm the associate, right? And I'm trying to convince my manager, or like not even convinced, but like went to something that was like, okay, finance and technology and how do you leverage, and I came back very excited to share it, and I flat out was told, well, what are we gonna do then? And it turned into this whole job security thing, which again, I do think there's some truth in that, and it has to be considered, like retention and like employee, like just connection back to the organization. But to me, I was just like stunned, because it would be my job that would be at risk, right? But I'm convinced that we can do other work, right? So I want to talk a little bit on that component of it, and then also this communication piece of, I again think it's useful if we free up staff time so we can build better communication with other staff, right? For me, I see it as that. But outsourcing something sometimes to folks sounds like it's an outsider now, right? Not involved in the organization. How are they going to fully know what's happening at our organization and our concerns? And then the cost piece also, right? It's not like outsourcing is for free. There's still a cost to that, right? So how do you like reckon with like, this is actually going to be of benefit as a cost, right? Like
I think job security is going to be something we have to kind of look at it from a different angle, because what we have done also, when we go in situation, we take over the whole operation, is we hire all the staff, and then you have an opportunity to really learn more from doing things right and not have to struggle with it. So that's the one thing that I find job security, because if you make job security as the thing that is going to prevent you from moving forward, that's not positive either. So if you say, okay, I can learn from really things done right and move from there. So that's one thing. And then also big and small organization. Some large organizations say, hey, I'm in too much trouble finding the right CFO, so therefore, I'm going to change. But then it's like, Tom Halter is an excellent CFO. I worked with Tom a long time. I collaborate with Tom on really consulting work with certain clients. And at one point, Tom said, hey guys, I want you to look about taking over the accounts payable. So it's like we have the flexibility, we have the wherewithal to really look at assessing your situation, and we have developed an array of tools and expertise that put it together. So an example of our firm, we have a team in the US, a team in India, and then we want to kind of assess the cost related to each job. So we had to find a timekeeping system that allows us to really merge all that. Before we didn't have a good one. So it's really, and if we did not analyze the service codes in a certain way, would have been garbage in, garbage out. So it's really kind of define the situation of where you're at and what challenges you want to resolve. So sometime when we go to an organization, I say, okay, do you want us to just tie you over until you find a CFO, or you want us to really go deep? And when we go deep, we look at what you do, how you do it, what is your management, what is your board needs in terms of reporting. And we develop format of reporting that allows everybody to feel comfortable to be able to kick the tires so the conversation is there. Did I answer the question? I make it more confusing.
No, I think what it confirmed for me is definitely that this is probably a culture shift in our sector, and that comes with its setbacks and sprinting forward. So that it confirmed that for me. But it's also like, yes, that this is the way forward. But getting everybody on board sometimes just take time, and that's okay.
Okay, so any other question? How are we doing with time, Shivani?
You're good.
Okay, so any other questions on outsourcing and getting comfortable with the financial statements?
There are some questions in the chat box. Shivani, can you?
Sure. Ken asked, what is the budget for outsourcing?
So I think that the budget for outsourcing, it depends on the complexity of the organizations. So for instance, an organization can have a $2 million budget, but if your funding is from DIFTA, from ACD, and from those complicated funding source, that's going to cost you more. But then the organization can have $10 million, but if it's a simple billing system that is not too many funding sources, not many sources of revenue, and so we don't have to kind of compartmentalize the accounting system, then it's going to be a lot more simple. So when somebody is telling us, hey, can you give us a proposal? So what we do is ask, can you give us your trial balance? Can you give us your listing of the funding source that you have? What are your sources of revenue? And that dictates the complexity of the accounting.
Ken, is there anything else you'd like to add or ask?
So Faizan, you want to add something to that?
Yeah, I think just to mirror and ditto what Nerou said, the main part and the focus of NCheng is to really empower our clients. And we work hand in hand with the client staff to make sure we, number one, build up their financial expertise so they begin to feel very comfortable with financial statements and they understand the nuances of not-for-profit accounting. And along with that, it's a journey that's both operational and financial, so we can make sure they have the best workflows in place to be efficient in their general development operations, as well as the best workflows for finance, so we can really maximize every part of the organization.
And to add to that is like, we're always looking for technology to really kind of make it more accessible to smaller organizations. So Vic AI, which is artificial intelligence, sounds like highfalutin and all that, but it allows us to really be more nimble and coordinate it better between what the potential client will do and what we will do, and how that process is streamlined to allow us to handle the smaller organizations.
With
You know,
that,
because before, what is below a certain budget, we say no, we can't handle it, because it's just like a staff costs and everything else is so high, the review process. So now we with the right tools that we're always looking for the right tools to really allow us to deliver the service better. So now we're able to kind of go deeper into the smaller organizations.
Right. I think to mirror Nerou's point, there is no right size of an organization to outsource. I think it fits for every model. And really, what the biggest value add is you get a network of industry experts that will guide you wherever you need guidance. So if you're a not-for-profit that's just starting off or revamping, definitely we can help you in any part of your journey.
Yeah, because Vic AI, you know, when we talk about artificial intelligence, a lot of people say, oh, we're using artificial intelligence. So on the accounts payable side, you know, we with this organization is a young organization. We met with the founder, and he explained to us how that artificial intelligence is working, how the algorithm or whatever that you guys call it, how it learns from repetitive and then checking certain things, and it's really amazing, and it allow us with time to really kind of make it a process easier. But to make it successful, you need to understand both sides. You need to understand the reporting, and you need to understand the software. What I find a lot of time, you understand one side but not the other.
You're giving a forecast of what I'm going to go over. So
okay, so I'm going to leave that there. Yeah, because he's our expert.
I will begin sharing my screen once more, guys. And I will really highlight some of the things that Nerou's talked about just now. Let me make sure I do this correctly. Here we are. So I'm going to ask for a thumbs up if the share screen looks good. I think great. Thank you, Tom. So really, I want to focus today on the financial health of the organization, but also talk about how big data is driving those insights. And to Nerou's point, Vic AI is something I'll cover here, and how Vic AI, in collaboration with big data, is going to help you as an organization automate your accounts payable and be more efficient. A little bit of a background of myself once more. I won't talk too much about myself, but I will highlight that I am an accountant by trade, but I have a passion for data, and I really want to find insights. And I